for the markets. We are actually chugging along quite nicely, stepping into the Diwali week with some fireworks for sure in hand, and we've made it to that 19,400 mark, so not bad at all. In fact, we managed a move of over 400 points in just the last 3 trading sessions alone, and we've been doing that minus any support coming in from FIIs. And even yesterday, when you had the likes of SBI and other PSBs not performing, the other heavyweights did the lifting.
The small cap index is at an all-time high.
Yeah, record high.
Where is the correction? So let's understand where we stand. I think it's very clear what we started discussing mid last week, that this was a bull market correction. It has turned out to be a bull market correction. Very sharp, very savage, and before you realize that your portfolios got dented by 5-10%, the correction actually gets over. For me, the most meaningful mover, I think, is the small cap index, because that's where everyone thought that, okay, there is a bubble and there is a trouble, and there is a bubble and a trouble both, and that index has jumped right back up. That's part one of the story. Part two of the story, Nifty now. 2 step forward, 1 step back. 2 step forward, 1 step back. In the month of October, it was 1 step forward, 3 step back. So there is a definite change in terms of orientation. Now, why is that happening? The reason why that is happening is because globally, risk on trade has started again, which is Bitcoin is up, yields are down, US markets have made a sizable recovery, and crude has plummeted. So you can say that bulls are getting some degree of tailwind because of global cues. Local confidence, which got fractured, has got mend again, and Nifty is clearly following a pattern which could be called as 2 step forward, 1 step back. What do you do in this market? Well, you should stay with invested, you should not go stock short, and I sincerely feel that the market, every time when a shakeout has happened, the orientation of the market is also changing. Banks are coming back, pharma is occupying a center stage, railway stocks are pausing a bit, defense stocks are no longer, with the exception of 1 or 2 Kochi shipyard where there is news flow, 1 or 2 defense stocks, they are also taking a back seat. But the small cap index, ladies, is at an all-time high. How interesting is that ring? Just the ring of the small cap index. So we are in a bull market which corrected. The correction has come and gone.
The correction has come and gone. At least that's the verdict so far on the street, and it's bank and pharma which is taking center stage. So that's a space to be in. But as far as the global cues are concerned, well, it still continues to be green across the screen, but not by as much. Yesterday, we did see a bit of a risk-off play because the US 10-year yields jumped back again around that 4.66% mark. So 10 basis point is kind of the intraday move that we saw on 10-year yield. Having said that, the indices, the equity indices managed to eke out minor gains. Nasdaq has continued to gain for 7 sessions on the trot. The Dow and the S&P as well have been higher for 6 sessions, and this is I think the longest rally that we have seen in many months so far. In fact, Brent too has managed to stay below the mark of $86 per barrel. So the fact that you were alluding to, Nikunj, that the global cues continue to be supportive, and Brent, which is a major factor for India, continues to be around that $86 per barrel mark.
See, I think crude and yields are an indication of the view of the world in terms of risk and in terms of consumption. Crude coming down at a time when the geopolitical concerns have not settled completely, that just tells you that markets have ignored the reality, that markets have ignored the concerns which historically have come every time when there is tension in that part of the world. That's one. Second, crude coming down when winter is approaching and production cut has been implemented by some of the oil producers. They have not pumped in additional oil. That is an indication of world feels that the demand deterioration actually would start, and global commentators have already started making a case that okay, it was money printing and it was more balance sheet expansion which prevented the US economy from slipping into a recession, but next year recession is coming. That's the view of the world. So yield is down, crude is down, and global setup for equities I think is looking quite favorable. So frankly, if you ask me, between October and now, what has changed? We've come on the right. The geopolitical tensions have not shaken us. The scare in the bond yield, we've survived. And the narrative, despite the US GDP print, is that we are in for a low growth in 2024. When you are in a low growth in 2024, yields will be down and commodity prices will be down. The conjecture is that if world is slowing down, then should equities do well? Now that's where the disconnect is. And I think it's a matter of time, mark my words. I don't know whether it is this year or next year, whether it's January or February, whether it is December or March. but FIs will come back. Because with each passing day, US economy is deteriorating, recession concerns are coming back, and the only option is that you migrate back to emerging markets. So I think there's a compulsion which is at play that they have not come back to India, but I'm not saying I'm making a prophecy or something, but I'm connecting the dots here. They will come back. And when they come back, there will be no sellers.
Yeah.
DIs are buying, and FIs, if they buy, then we are looking at a bout of short covering.
Yeah, absolutely. And, every dip in the market, I mean, to be honest, has been shallow. Even if it has been steep, it has been very swiftly bought into. Case in point, the dip that you had about 2 weeks back, and look where we are from there. In the last 5 trading sessions alone, we've made a gain of about 400 points. The other thing, and that's the other silver lining, the fact that the IPO market as well has been very, very lively. Today, of course, the much awaited Honasa, or the parent of Mamaearth, is going to be listing. The expectation on the street is that it's going to be a premium. We had a good listing yesterday as well. The IPO price is set at about 324 rupees per share. I mean, the only thing that you could argue is that the retail participation was not as much high. It was more the QIB portion which did see a flurry. But you've got ESEF, SFB as well. You've got ASK Automotive. You've got Protean, eGov as well. So all these are seeing good participation.
Okay, let's start with Honasa. I mean, this is something what I've understood when I spoke to some of the folks who understand how to value a company like Honasa. They are of the view that, look, it's richly priced in the near term. It may not be the best stock in terms of giving you returns. I think Honasa in my book is something which you would say that, okay, it's got all the ingredients of becoming a brand, and they've successfully created a great brand, Mamaearth, in a very competitive environment. They've taken the legacy brands, the Godrej and the HUL, and they've really taken some of those brands head on. In that, if you manage to create a brand, I think that just speaks volumes of what the management has achieved. But B, when you connect the valuation, and since there are a lot of relative valuations available in terms of the consumer staple, and then you compare that with Honasa, you would say it's not a stock where you can really say that you're getting gold at the price of silver, or even 24 karat gold is coming at a price of 22 karat. I think it's richly priced. It may not, it may not be a stock you want to chase at these valuations. Stocks like Honasa or stock Mamaearth, you need to buy them when there is selling in the market. You got to buy when there is blood on the street, so to speak. So these are stocks you want to buy when there is bad news in the market, which will have an impact on the correction. I think I like what they've created in terms of business. I like what they've created in terms of brand and the approach, and the acceptance in terms of consumer. Now, how are they able to walk the path of profitability? I mean, can they continue to grow this brand? Will they cut expenditure in terms of advertising? Will they be having their own niche presence? These are stories which I think markets will discover. So I think for Honasa, in my book, there is a belief, but there's a long discovery which will finally establish the stock price. That's my view. But otherwise, I think what we are not realizing is that there's so much of interest in the IPO market, and the variety of companies which are getting listed. Aisha, there used to be a time then only infra companies were going public, or only IT companies were going public, but look at the variety of companies which are going public, from hotel company to a hospital company. Cello yesterday. Then you got Protean, which is a data company. SaaS companies are getting created. So the options of where the Indian entrepreneurship vehicle now is, I think, extremely exciting. And new exciting businesses, which are the high growth future businesses, they're getting added. Some of these businesses were always in the private domain, and you said, oh, I wish I could buy a Zomato. I'll wait for Zomato to go public. I'll wait for Paytm to go public. Guess what? Some of these exciting businesses are going public now.